Welcome back, everyone, to the program. My name is Jeff. My Twitter is here. I hope. Yes, I got it right. Okay. It's right there. There's my Twitter, right there in the corner. You can follow me there. Thank you for watching these videos. I appreciate you sharing your valuable time, whether you're watching me on my Litecoin Leader channel or watching on Economic Preppers. I appreciate either one. So please give us, as a thank you, please give us a like, a share, subscribe, a notification bell. Share this video on your social media if you like the content, or if you don't. I don't care. Just share it out so that people can find it. Okay, that's very important to us. So what am I talking about today? I am talking about two stories regarding Bitcoin and where it's heading. The theme of 2024 is going to be, obviously, people are starting to take note of it as it's over $50,000, and people are seeing that the value is increasing, probably because the currencies are all decreasing. But when the price of two things is just a ratio of one to the other. So as Bitcoin goes up against the dollar, it just shows the dollar is losing its value and its purchasing power. So let me share my screen, go over two stories, and then I'll drop out of there and we'll talk about them both. So first off, the first story. All right, this one, again, from Zero Hedge, and I'll try to put all the links to everything in the description. This one's called Why I Bitcoin, and it's from QTR's Fringe Finance. Now, this was a little bit hard to look up. So what I did was I went through the whole article, and he started to say, like, I know some of you may have been surprised when you saw me on X yesterday, formerly Twitter, proclaim that my days of disparaging Bitcoin are over. Well, I went looking for that on X. Click this. This doesn't go anywhere. So what I did was I went to QTR and I looked up and I found his Twitter account. So there's QTR. It's a subscription page, so you can't really dig into this too much, but that's his Substack. But on Twitter, QTR exists, and his last post, or really one of his last posts, was just simply Bitcoin. Okay, so he deleted the previous ones. I don't know if he got attacked or there were issues, but he doesn't have too many posts that are up there. Maybe they just drop off, but he's all about his Substack at this point. More power to him. That's fine. But his post as of just a few hours ago, it now just reads Bitcoin. So apparently he backed away from whatever he said for whatever reason, and then he just went back to that. But let me go back to the article. And what basically he said is that his days of disparaging Bitcoin are over. And he also said yesterday, apparently in that post that's gone, I have been watching people that I know are much smarter than I am, specifically those in the sound money community, singing the praises of having exposure to Bitcoin for years now. For me, that was the hardest thing to ignore. So, by the way, if you could find this tweet, I'd love to see it. Leave a link in the comments. I check them all out. Really appreciate that as well. But you can go ahead and read the rest of this article. It goes on pretty long, but it basically just says that he was wrong. And I didn't, it shows strength that he's able to admit that he was wrong. Okay. And that sometimes you get things wrong, and sometimes that what you previously believed, you change your opinion, and that's okay. So he changed his opinion on Bitcoin, and he's no longer disparaging. And in fact, he's a supporter on it. So now, even though his tweet's gone, the story is there. And I guess he's going to get a little bit of attention based on that and from people like me talking about it. But let me talk about this other article from Zero Hedge, and so many ads on Zero Hedge, but that's okay. We used to like the content. Get rid of that. The mantra for the next cycle: allocate 1% to Bitcoin. Now, I'm just going to jump to the end, not read you the whole thing again. You can go ahead and read that. The link will be in the description. I predict a new investment mantra for institutional fund managers: the 1% allocation. Now, that's already been, he highlights that is under Fidelity's ETF. They're looking at 1% for cryptocurrencies. And then a new 1% rule by Bitcoin. And then and here's the picture about how it pulls all the currency and goes right into Bitcoin. So here we go. At the very end here, you can see the disparity of how the ETF is going up and gold's going down. And then finally at the bottom here, he humbly presents to you the theme of this cycle, which is the 2024 Bitcoin cycle. The theme is the institutions are coming. The core driver is the Bitcoin spot ETFs. And the mantra will be allocate 1% to Bitcoin. So again, I will put all that in the description, put all the links to both those articles. But let me just talk about what all those things are saying, in my opinion. So first off, this 1% of Bitcoin, it's not new. It's not news at all. For those of you who started, I started back in 2016, about then, a little fuzzy right now, but that feels like that's more than half the life of Bitcoin, which is crazy to think about. But back then, I remember a guy named Anthony Pompliano, otherwise known as Pomp, and he was on CNBC, and he was trying to talk to people and trying to convince them on Bitcoin. They were naysayers. He was the only one that was adamant about it. He said, hey, how about just 1%? And eventually they got there. Especially they said, all right, maybe 1%. Now today on Bitcoin, they've gone from 1% to 5% to 10%. Now daily they talk about Bitcoin. They have it represented on their charts, how Bitcoin is doing every single day, because it's part of their financials. So they treat it just like any other financial vehicle that's out there, something you can invest in, something you can make money on, something you can make value on, something that increases over time. But then again, we know it's different. We know it's not like stocks. Because there's only 21 million Bitcoin, whereas they play games with stocks, they have derivatives, all that stuff that we don't like. The point is that they've already adopted Bitcoin and they started talking about it years ago, way beyond the 1% allocation. But now institutions are coming because of the ETFs, the trading funds. So the equity trading funds, they're now allowed to take their Vanguards, their Fidelities, their stock money, their stock market money, their stock market currency, the money that they're making on paper, the stock market, get out of that and put it into Bitcoin. And because there's a spot ETF, actually, there's 11 of them now, they have to buy the underlying assets. So really, they are buying Bitcoin. They're just not holding it because Coinbase is the custodian. And hopefully they realize that you want to be your own custodian and not your keys, not your coins, not your money. If you want to really own Bitcoin, you own the things in a private wallet, like we teach you about, like I teach you about, and like we teach you about over in Economic Preppers. So the 1% rule is not new. It's new to some, but it's, sometimes, what is old becomes new again. So the 1% rule is now for the Wall Street monies. But the big thing is that if you look at the numbers, so that 1%, you go back in that article, it says that the money on Wall Street, $150 to $300 trillion. So if you take 1% of that, that's $1.5 to $3 trillion. Now, Bitcoin, the rough math, using 20 million instead of 21 million, just to make the math easy, 20 million Bitcoin times $50,000 value, that's a $1 trillion market cap. Now we know it's higher now. It's over 20 million. We also know that I think we've admitted 20 million at this point. We're really close. But the entire supply of Bitcoin, the lifetime supply of Bitcoin will ever be 21 million. But to make the math easy, I just made it 20 million times 50,000. That's a $1 trillion market cap. The money that we're talking about here, the currency that's potentially coming over in that 1% rule, if that 1% really does happen, institutional money, that 150 to 300 trillion becomes 1.5 to 3 trillion added to Bitcoin's 1 trillion market cap already, which means Bitcoin goes up 150 to 300%. So now you're looking at from 50,000 anywhere to 100, 125, all the way up to $300,000 per Bitcoin. That is what could happen in 2024. So just want to put it in perspective, put that out there. Both articles, again, will be in the description. Please, if you like this kind of content, share it out. Let's get some more traction on these channels. Really helps us out, helps myself, helps Dylan, helps everybody involved with Economic Preppers, helps our community, makes the community grow and stronger and smarter and understanding what Bitcoin's all about, because you will be the expert in your community very soon on Bitcoin. But with all that said, I'm going to leave it right there, and I'll see you in the next video. Take care.